Today I want to talk about protecting gift money from a parent when they help their children buy a home or a condo. I often have clients who are buying their first home together when they get married. And given the prices of real estate these days, many people are fortunate enough to have their parents help them with a down payment. I've also even had some clients who come from rather wealthy families and their parents are able to buy them a house or a condo. But what happens if your parents buy you a house or give you a considerable amount of cash to put down for a down payment, and then in years down the road, the marriage ends? Although the cash or the home was a gift from a parent, given the Family Law Act in Ontario, if it was a matrimonial home, then the son or daughter-in-law, aka the soon-to-be ex, is entitled to receive half of the equity or half of the total value of the home if there's no mortgage and they have 100% equity upon their divorce. Now, although the cash or the home was a gift from a parent, according to the Family Law Act, if it was a matrimonial home, well then the son or the daughter-in-law, soon to be ex, is still entitled to receive half of the equity or half of the total value, even though the money came from the other spouse's parents. Specifically, the money which the other spouse's parents contributed. Now, fear not, there is a way for parents or a parent to protect their financial interests while keeping everything fair for the recipients of the generous gift. You see, upon the sale of a home, whether it's a divorce or not, the mortgage must be paid in full from the proceeds of the sale. It's usually done by the real estate lawyer. Then the remaining equity in the home belongs to the homeowners, meaning all of the value that isn't currently owed to the bank or to the lender as a mortgage. If one parent is going to give you a gift, what they can do is simply register a mortgage against the property in the amount of the gift. The mortgage can be an open mortgage at 0% interest if you like, with no demand for or requirement for payments. Here, you know what, here, let me share a true story that I had a couple of years ago to illustrate. So a couple of years ago, I had a client who bought a $2 million house. One spouse's parents actually bought them the house. The parents wanted their son and his new wife to live happily ever after together. But if the new couple were to ever get a divorce in the future, $1 million of the value of that house would effectively gone to the ex-daughter-in-law. So the groom's father registered an open mortgage in the amount of $2 million against the house at 0% interest with no demand for payments or repayment. That way, if the house was ever sold because of a divorce, then the generous father would get his full $2 million back. Now, some of you might be thinking, that's so unfair to the daughter-in-law in that scenario. She was cheated out of her, or she would be cheated out of her share. Well, not really. You see, in a marriage, the couple is equally entitled to 50% of the equity plus capital appreciation or depreciation, if the case may be, from the time they bought the property to the time they sell it. So, while there really is no reason that a daughter or son-in-law should walk away from half of a gift from the other spouse's parents, if you consider the scenario that I just gave you, you'll see that the daughter-in-law in this scenario is still entitled to her fair share. Here's what I mean. The lender provided $2 million as a mortgage to buy the house. And whether the lender is mommy and daddy or a big bank, the lender always gets their money back first before the sellers are paid. So if the couple lives in that house for 6 years, let's say, and the house was then worth $2.8 million, then the divorcing couple would each be entitled to 50% of the $800,000 capital appreciation of the home. So the daughter-in-law would still get her 50% of the increase in value of the home. In other words, what she's entitled to, and equal to what he's entitled to. The lender just gets his money back first. So if you're thinking of buying a home and you want to talk about how your parents might be able to help you, or if you're a parent and you want to know how to help your kids buy a home safely while protecting everyone's interests fairly, I'm always happy to chat and answer any of your questions. And remember, when it comes to real estate or any other experience or process in life, if there was a better way, wouldn't you at least want to know about it? Again, if you have questions about buying or selling real estate, mortgages, investing, the real estate market in general, or selling a matrimonial home and divorce, just email me with your questions, any questions you might have, mike@TheREguy.ca. Always strictly confidential, never any pressure or obligation. I just love to talk real estate and I love to help. Thanks for watching.